Welcome to the Transparent FX Academy. In this video, I'll speak about USDCAD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite important level of structure, because what we can notice is that the market has already created several higher lows exactly at this trend line. And we can see how the market is now creating again a rejection to the upside away from this level, fueled by institutional buying of USDCAD. And we will be speaking about that institutional buying in just a few moments when we move to the commitment of traders analysis and see how institutions are moving their orders. But for now, let's keep in mind that institutions are longing USDCAD and it is rejecting a very strong trend line. And let's also keep in mind that the last move here was a massive rejection to the downside away from a strong supply and resistance zone, which was this previous level right here. Now, when you see such a strong push to the downside, usually the market follows with a correction, because no market can just go down in a straight line. Every downtrend is composed by a series of impulses and corrections. So there is a good probability to see a deeper correction, even if the market then overall wants to move lower. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. We can notice how the market first was in a very strong weekly downtrend. We can notice that by seeing how the market was creating weekly lower lows and lower highs. Then we had the creation of this triple bottom created exactly here at the lows. And now the market is shifting back to the creation of weekly higher highs and higher lows. So there's a good probability from here to see the market start creating new higher highs and higher lows, essentially rejecting to the upside this level of structure support, which it is now testing, because this level was acting as previous weekly support from which this rejection to the upside was created. Then after the market broke it to the downside, became resistance, again was respected as resistance here. Then this break to the upside made again this level become from previous resistance support. And the market is now testing it as support, and there is a good probability of seeing a potential rejection to the upside away from this level. Dropping down on the daily time frame, what do we see? Now here on the daily, the situation is very clear. We can notice how the market has just created this overextended M pattern. And after the creation of an overextended M pattern, what you would expect is the market to create a rejection to the upside, to go and retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is from this high to this low, giving us a 0.32 retracement exactly here, meaning that there is good probability of seeing a potential rejection to the upside back inside of this level. Now, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, we can see how we went from minus 70K down to minus 105K net positions on the CAD. Now we have to keep in mind that if we are looking at the data for the CAD, we're actually already looking at CAD USD, because all currencies on the spot are traded against the USD. And as institutions are shorting the CAD, it means they are longing USD CAD, because if you short the CAD and the CAD is traded on the spot against the USD, it means you are longing USD CAD by shorting the CAD. And that is exactly what is going on from an institutional perspective, with shorts going from 78K all the way up to 125K, meaning that longs are getting added aggressively from an institutional perspective on USDCAD, making it stronger. So if we move back here to the chart, this means that there is good probability that this overextended M pattern could complete, potentially with a rejection higher and correction after this overextended M pattern. So in a situation like this, what would I expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So as I was saying, in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive, as my students know very well. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this demand and support zone. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.